Hi everyone. Today I'm going to introduce two growth stocks to watch for the rest of October. One recently IPO in gaming industry and one star electric car company, both of which have huge potential going up. First, it's Unity Software, ticker symbol U. This is a stock just finished its IPO. Be patient. Don't just quit the video and make the purchase. The stock has already gone up a lot. Let me finish the analysis and share my entry price so you will have a better understanding on why this is such a popular stock and how to make good profits from it. The first question is, what does Unity Software do? They're the developer of cross-platform game engine Unity. However, today this engine is not just for gaming. It is used to design automotive, in transportation, manufacturing, film, VR, 3D animation, architecture, and construction, all those areas. Since it's a new stock, we'll analyze from the following 6 aspects. Let's start from their major achievement. What's game engine? It's like the car's engine, which is the core of the car. The game engine is a system that provides game developers all the models, tools, and templates so they don't start from zero all the time. Around the world, there are over 1.5 million monthly active creators. Over 50% of the games use Unity engine. The app is downloaded over 3 billion times every month. You see how good Unity is and how much potential it has. What about their business mode? Where do they get their revenue from? Well, there are 2 main sources of its income. One, subscription fee for using the engine. For starter, if your company's revenue is less than 100,000 or you're an individual developer, you can use the free version. Once your company's revenue is more than 100,000, there are 3 choices you can make. The first one, Plus. If the revenue is less than 200,000, you can pay $399 per person per year. Pro. If the revenue is more than 200,000, you can pay $1,800 per person per year. Or you can choose Enterprise, which is $200 per person per month, equals to $2,400 per person per year. The second source is operating solution charge. It provides service and support for customers, help them grow. They can offer support to other game engines as well. The operation solution income has always been a lot higher than the subscription fee. In 2020, it's 61% versus 29.9%, twice as much. We can see the orange part grow slightly bigger throughout the years. This really diversifies their income. Now, some of the game lovers may say Unity Engine is not compatible with Unreal Engine developed by Epic Games. The latter has much better graphic quality. It's the AAA level. That's true. However, companies that are capable of developing AAA games usually use their own engine. Smaller companies usually put quality-price ratio above everything else, so Unity is a better choice since it adapts better to all platforms. Also, there is a huge time difference between making games using the 2 engines. Since Unreal has better graphic quality, it takes a lot longer. Time is money. Unity is easier to learn. Unity has better advertising system, so developers make money easier. Therefore, many developers decided to choose Unity. Unity has a lot bigger communities and has a lot more resources. Resource and community size are the most critical things for game developers. It's a lot easier to obtain help within a bigger community, no matter technical questions or job hunting. It's a lot easier to get templates and more resources from bigger community as well. I wouldn't worry too much about its competitor at this point. Next, balance sheet. Unity has a pretty good looking balance sheet. It has about $450 million cash and $340 million working capitals. The total asset is about $1.3 billion, while the debt is only $124 million. The financial status of Unity Software is getting better and better. Revenue growth year on year is 42%. Not bad for an old company. Not that old, but the company was first founded in 2004, 16 years old. And with COVID around for the next few years, this will keep on increasing. Now let's take a look at the cash flow of the company. Gray indicates the cash flow from operating solutions. The cash flow is still negative, meaning they're still losing money. But we can see the trend is going good. This is because management is able to control the expense on research and development, sales and marketing, or while maintaining the gross margin. The blue bar is the financing activity. You can see they don't need a lot of efforts to obtain more money. Geographically, their revenue is diversified, which is very important for a gaming company. Last year, only 24.4% in US. China contributes 13.5%. Europe, Middle East, and Africa contribute 31.6%. Asia-Pacific countries contribute 18.5%. And the rest of America contributes 6%. Less revenue coming from US is actually a good thing. When you compare the 2020 global gamer geographically, you'll see there's around 7.7% gamer increase in Asia-Pacific area, 6.6% in Europe, Mid East, and Africa, 4.3% increase from Latin America, and the numbers decreased 0.9% in US. Maybe they spent too much time on stock market. About 75% of Unity Software's revenue came from outside North America, which is the fast developing area. In my previous video talking about a game ETF, ESPO, I showed how much potential the game industry has. You can check out if you want. Now remember, I said at the beginning that Unity is not just a platform for the game. The gaming market sits at $12 billion, while beyond gaming, the market is even larger, sitting at $17 billion. After analyzing opportunities and concerns, is Unity too expensive? When should I buy it? If you look at revenue growth, PE, and PS, you will find it's ridiculously expensive. However, you can't use the traditional way to evaluate a high growth stock. There are lots of imagination and hope there. Hope can be very expensive. The overvalue is not just for Unity, it's for the whole small cap tech stock sector. That's also the reason why so many small tech companies choose to do IPO in this bull market, since they can easily get lots of cash. Two major risks for stocks just did the IPO. One, IPO stocks haven't been tested by the market. We don't know what percentage of the price is due to the market mood, what percentage is due to the real value. Two, lockup period. It's a period when the insiders cannot sell their stocks. 3 months, 6 months, depending on the company. When this occurs, the stock price will have big fluctuation, most likely going down since they're collecting money. However, Unity Software allowed its employee to sell part of their stocks from day one. They have confidence. I don't want to buy this stock at a price above 90, especially when the election is coming. If Unity returned to $81 to $83, I will start purchasing in small steps. Okay. Before we get to the second part, if you find my video is helpful, please click the like button, subscribe to the channel, and turn on the little bell notice. Thank you. The second growth stock I'm going to talk about today is NIO. NIO is an electric car company founded in 2014. It's the pioneer for smart electric cars in China. Their target is to sell premium electric cars at a affordable price. Last year, it suffered cash flow problem and the stock price crashed below $2 for quite a few months. However, as China recovered from the pandemic first, this stock is like sitting on the rocket. It closed on Friday at $28.48, while analysts moved the target price to $40. What has happened and why do people love this stock? When talking about electric cars, you can't bypass Tesla. They got factories in China also, and they just slashed their car price recently. However, as the top competitor, NIO's price went up. What's the reason behind that? Well, first, Tesla has accumulated a huge technical advantage and experience in increased the mileage. NIO avoided to compete with Tesla directly in that aspect. NIO's owners don't have to charge a battery. Instead, they'll just drive to the shop to replace it. It takes 3 to 10 minutes to replace the battery. This feature is great for Chinese, since most car owners don't even have a garage or a spot in the parking lot. And second, vehicles are second largest expense in China. The first is obviously real estate. This industry also involves lots of new technology. Therefore, Chinese government gives good policies helping the electric car industry. Being a star already, NIO got the biggest slice of the pie. And third, the most important catalyst for NIO's stock price is the increasing sales. Their gross margin turned positive in the second quarters. Now the problem is not selling cars, but to manufacture them fast and reliable. NIO delivered over 12,000 vehicles in the third quarter of 2020, representing an increase of 154.3% year over year, and exceeding the higher end of the company's quarterly guidance. And in order to keep customers happy, they promised to change batteries for free for all their ES6 and ES8 cars for original owners. They also offer lifetime free quality insurance, free maintenance, and free roadside assistance. It's a huge profit for customers. The past summer, when more owners enjoyed this service, they became free salesmen. A study in summer on whether a customer would recommend the car showed NIO beat BMW, Tesla, and Mercedes. They target premium cars. You probably heard how rich some Chinese people are. Even if only 1% of their population is rich, that's over 15 million. They love anything that can help them stand out. Personally, Tesla's recent price slashing in China isn't that smart. The better way is to add some fancy but unnecessary device and describe it as a unique feature. Instead of lowering the price, lots of people would probably pay even more for that. And NIO has pretty good service and product. The rest is money issue. Here's a famous saying, right? The only time when NIO is in trouble is when the capital is in trouble. And when the capital is in trouble, even if you hold the stocks for banks, utilities, good luck. Now, what about risks? Currently, there are two major risks. First, there are other electrical car companies growing fast in China, like Li Auto, XPEV. But don't forget, up to now, Chinese spend the most on electric cars, more than all the other countries together. There's huge market potential. The cutthroat competition may not be in the near future. Even if so, the star now has huge advantage and gain loyalty from a lot of customers already. Second, U.S.-China relationship. This repetitive factor, it's always going to be there, at least for the next 4 years. Trump or Biden, you might as well forget about that and just live a good life. So what I found in all those years investing in growth stocks, performance determines the bottom limit. A story to give or the imagination gives the upper limit. NIO has both. So this is going to be a great growth stock and for you to hold on in the long run. Analysts have increased the price target to $40. I'm a bit conservative, but $35 should not be a problem in the next few months. After the recent pop, it's over $28 already. If you're looking for short-term opportunity, I think it's at the high point already. The safer choice is to wait for an adjustment to get in at a lower point after the huge run like this. Personally, I'm going to wait for this adjustment and load some more. But don't be like some people I know who believe in NIO's future but have always been trying to hope it get cheaper at $3, at $9, at $14, and ended up empty-handed. If you did miss the electric car stock, don't worry. In the next video, I'm going to talk about a very nice growth stock in the related industry, charging stations. Okay guys, thank you. See you next time.